if you look at the stock market, an index in particular, you think we're on the path to recovery, that the worst is behind us, and we're just moving forward from here on. Now, if you look at the economic picture, if you look at stimulus, if you look at the election, if you look at other stuff, you don't really see that type of picture. So one thing to note about the stock market and where it currently is now is tech is the big mover. So energy is down 50% year to date. You have the JETS ETF, which is down 40% year to date. You have financials, which are down 20% year to date. So you have a lot of different sectors of the economy that are all important that are down, but tech keeps rising. Now, we know in big part why tech has risen, because you're speeding things up that were going to happen anyway. You're speeding up a wider adoption of e-commerce, online shopping. You're speeding up things like Zoom. So in some cases, it's no surprise that tech has gone up. But when everything else is down and you look at the way the economy currently is, and you see QQQ is up roughly 30% year to date and up 60%, or more than that actually, since the low point of the year, you wonder, is this thing going to pop? Is now a time to store cash? Is now a time to invest more because it's going to keep on going up? There are three different scenarios I'll cover that can cause some bubble popping and can really result in significant downward motion. The first thing to look out for is that in Europe, cases are rising, lockdown measures are getting increased. And the way it was done in the US, you saw China do stuff first, you saw Europe follow up, and then it came over to the US just from a policy standpoint. So you do want to pay attention to stuff that is happening in Europe. And since you have a world economy with everything that is connected, especially when we are talking about big companies that have international customers, stuff that's happening in different parts of the world, very important to keep an eye on for not just what could possibly happen here, but also you look at certain stocks and you think how they are going to react. The second thing to look at is this is a big week for earnings. So this is going to be a make or break week where if the big companies like Google, Amazon, Apple, Facebook, and Microsoft all report good earnings, we're in on this ride for a little bit longer because those are the five companies that have an overwhelming presence on most of the index funds that people invest in. So if those five companies which report this week do well, then we just keep riding along for a little bit longer. But if they don't do very well, not only are they going to drag the market since they have such a big presence, but their downfall in the event of bad earnings will also cause more concerns. So similar to how if one airline reports bad earnings, people are going to take that and say, oh, I guess all the airlines are going to do bad and they're going to sell, kind of beat that bad news. The third thing that could pop the tech bubble is the election jitters. Now, with the election coming up very soon, we're going to get a final decision that may or may not be contested. But one of the things to keep in mind with an election is that the companies do not change. Like, sure, the stock prices, they will change. You'll have a very volatile period, but Apple is still going to keep producing computers and iPhones. Amazon's going to continue to sell to all their different customers. And it's not like these companies on election news all of a sudden have 30% drops in revenue or all of a sudden can't reach customers anymore. So in the event of election jitters taking down the market, that can actually be a very compelling buying opportunity because the companies themselves do not change because of the immediate results of an election. Now, a candidate who becomes president could bring up new policies that create change in the long term, but in an election, if the stock prices go down, like the short-term narrative of those companies, for most of them, remains unchanged. So those are just some of the different things that could bring down the tech stocks because it seems like every other sector has either been completely hammered or you have like utilities that's up like 1%. You've got healthcare that's up a little bit, but tech seems to be that big winner. Now, some people, they are talking about 2000. And you look at valuations, and yes, there are some valuation metrics that say the stock market's overvalued as much as it was in 2000. One thing to keep in mind, though, about 2000 is that while the metrics kind of line up, some of them definitely do, you have in 2000, like people just slap .com at the end of their company and they like double in value. That was the type of environment. You had this mania for the .com boom, which turned out to be a bust because you can put .com at the end of your name and collect money from investors, but at the end of the day, you got to show a profit. And that is something that some of the EVs like Nikola Motors should have thought about when they went public. But in any event, I'd love to hear from you guys your thoughts on where the stock market is going. There are definitely a lot of concerns, which is why most of these sectors are down. But with tech being such an overweight, a big presence in these index funds, it does look like things are going smoothly in the stock market. And people make the mistake of thinking stock market is the economy. Those are two very different things. The economy is where you are now. The stock market is in anticipation of where you think the economy will be in the future. So I definitely hope this video helped out some people. I'd love to hear from you guys in the comments. Subscribe if you want more like this, and I'll see you guys next time.